Welcome everybody around the world for participating in this webinar, Doing Business in China, where we're going to answer all your questions about taxation and HR. This is part two of the webinar. The first webinar, we discussed a lot on the setup of an entity and what important questions come up when setting up an entity. And today, as I said, we're going to focus on taxation and HR, but also maybe the other questions that we have. Some information before we start. So I hope that everybody uses a cable for the internet because that gives the best connection. The webinar is being recorded, so that you know that. And the webinar will be recording will be shared afterwards to you in an email. Behind the scenes, we have people that are able to help you if that is necessary when you have any questions for if something is not working. So just use the webinar window, go to webinar window to ask any questions to the moderator. For today, I will take 40 minutes of your time, and the goal is to make it as interactive as possible. So it's also a request to the participants to be involved in this webinar because it's going to be your questions we're going to answer. Of course, we get a lot of questions from our clients, and we're trying to answer these questions in this meeting. But if you have any specific questions, feel free to answer them. If they are too specific or we can't really answer them directly, we will come back to you after the webinar to discuss this. So for today, I will be your moderator, and I'm in my house. I've just moved. It's a little bit of a mess, so don't apologize for that, but let's focus on the content. Today, we have two excellent speakers or people I interview or discuss these questions with. One is Mark Ray, Managing Director of Severance in China, based in Shanghai, and also Henry Ren, Head of Finance in our Shanghai office. Mark has been in China for over 12 years, I think over 12 years, in advisory roles, in different roles, and advised different companies, Fortune 500 companies, SMEs, on I think hundreds of companies on their strategic entrance into China, and helping them to structure their business as smoothly as possible. What I think enjoy, or what I think best is of Mark, is that he can make very complex matters very simple and clarify to our clients, and our clients have really enjoyed that. Henry is, I think, extraordinarily experienced in accounting in China. He has over 16 years of experience in accounting and consulting in Singapore and China. He did his MBA in Edinburgh, and he manages our back office and our accounting team. I think what is good about Henry is that he really understands that practice in China is sometimes a little bit more important than the theory behind it. So I think with these two people, we are in an excellent position to answer all your questions of today. If you want to know how to get involved and ask a question, please use the window, either a chat or the question where you can ask any questions. So with this out of the way, let's get started. I think last time we ended in the webinar when we were talking about Guanxi and the value of Guanxi and the using of Guanxi in setting up, but I think it's much wider, and I want to begin where we ended last time. And I think Henry, you had a very good point about using Guanxi, the Guanxi in your work in China. Can you repeat your view on when people say, can I use Guanxi, or I can find a way to do something quicker?
Yes, of course. This is a very basic words or scenarios the local service provider will talk about. They're very interesting to sell their relationship with the government, so-called. But actually, in China, it's not that simple. And if the people that goes in a special way, and there will be a danger happen in future. We have met a client, the actually believe some local provider to tell them to use a very special way to pay the tax. But our experience is they are actually, they after 1 year, the tax will come back to them and to say the tax payment cannot be recognized. So they have to pay double. So this is what they say. This one of a lot of cases, one of them we met, they will cause the direct and a very specific damage or loss of the crime. So when this happens and they go back and look for the service provider they talked in the past who will encourage them to do so, this service provider actually just tell them this is not my business anymore, and this happened 1 year ago. We don't know what's happening, and you're on your own. Basically like this.
Yeah.
So for our client, they have nothing. They are not intend to do anything which is bad, but they just be misguided or they just be poisoned by some people in China. So that's cause the consequences. It has to be taken by themselves.
Yeah, that's right. That's unfortunately that is so, and we hear so many times that clients and tell us that, oh yeah, I know a friend or my partner, or I spoke to somebody that can do it much quicker, and they find a way and they've done it like this, even though that the laws are very strict, I think, on how things should be done. Mark, what is your view? I think you always have a good quote on if we talk about Guanxi. I think what
Yeah,
was it?
it's basically Guanxi either retires or goes to jail. And so even if a company has, let's say, relationships in the government, relationships in the tax bureau that can help you bypass the law to get a license, or frankly, a lot of it isn't even, a lot of it's just cutting corners to set, maybe especially in setups where you're set up 1 month faster. But in the end, you're now no longer set up correctly, and so now you're in this graft spiral where you have to continuously pay the person off every year, otherwise you're found to be out of compliance. But again, as we say, Guanxi retires or goes to jail. So once that person or that government official either retires or maybe gets caught up in a corruption scandal, you don't know, a new or just gets reassigned, reshuffled to somewhere else, a new officer may come in and review your case, and maybe they're not okay with what was going on in the past, and then they'll come after you in that way. And so again, it really has to do, I would say, a lot of people will hear, or their friends say, oh, they've done it this way, they've done it that way. And so a lot of it's just how risk averse are you, because I mean, China's a huge company. Of course, go if you want to save a month, if you think that saving a few $1,000s a year on taxes is worth the potential risk of massive fines, closure of your company, or exit bans, entry bans, etc., then go ahead and do that. It's, to me though, it's you really have to weigh the risk of cost versus benefit, and eventually, the house always wins, is what they say in Vegas. And so it's quite a gamble that you end up taking.
Yeah. What I see is like big. I think I definitely agree with you that larger multinationals. I don't understand why they would take the risk of cutting corners and doing something quick, maybe a setup or.
Right, and even just going back to a story that I know, and this was a few years ago, just of a friend of mine. They opened, this was a couple years ago in Shanghai. They had opened up it was just a kind of a healthy foods cafe, and they used a really inexpensive service provider to set them up, and it was a foreigner. And they said, yeah, we can set you up, no problem. Yeah, we'll take care of everything. Don't worry about it. And so they did set them up fairly quickly, and within about 2 or 3 weeks, AIC, the Administration of Industry and Commerce, came by to do a site visit. And what they realized or what they found is the business license, which describes, you know, the company address, the legal representative, and your scope of business. The business license wasn't, the scope of business wasn't basically written appropriately for them to conduct the business that they were conducting. And so they ended up, and this was an entrepreneur, she was young. They ended up fining her about 450,000 RMB, or about 60,000 US dollars. And she had to shut down until she became compliant. Issue is, as an entrepreneur, she was, I think, 25 or 26 at the time, she just didn't have that kind of money and like extra lying around. And so she eventually had to shut the business down, and she managed to negotiate the fine down from 450,000 to about 60,000 RMB. But she had to shut down. And then when she went back to the service provider, I mean, it was basically the guy's just like, well, you didn't have to use me.
Yeah.
You know, so he just completely brushed it off. So it was really unfortunate, but that story always stuck with me, is, you know, why it's really important to not just look at price, you know, when deciding on a service provider. And of course, I mean, you don't want to overpay when necessary, but I would say China, more so than any other country that I've been, you really, to a point, you get what you pay for. If it's too cheap, there's a reason for it. You can't really have too high expectations. That being said, you also find that certain things here are far more expensive than they're worth. So really finding a balance can be difficult.
Yeah, well, I think I think that's good advice. I think from you and from Henry on looking and you choosing a service provider, or choosing doing anything in China, right? So I think it was a good. I think it summarizes nicely what we discussed last time, and I think it's a good start of what we discussed now. And of course, let's then focus on one of the key questions that people have after they have set up their business all correct and everything is done, and then being able to set up their bank account. Of course, the accounting starts for any company, and people are always amazed about the extent of how account or report heavy I think China is, because there's a lot of statutory reporting going on. Henry, can you highlight a little bit of the statutory reporting, what people need to think about when setting up when they've set up their business in China?
Basically, we have monthly, quarterly, and yearly report. And the monthly is basically only for the turnover tax, like VAT, like individual income tax, some small tax like stamp duty, or sometimes the stamp duty is still, the timing for this tax is different based on different cities. So the quarterly normally is enterprise income tax. And we also have the annual filing, which basically is separated to the ASC filing and the tax filing. So for the ASC filing, it's like a survey, and the ASC need to get your information of this entity in their website and the database. And for the tax filing for annually, basically they will take the procedure to review and calculate the actual taxable income based on the tax law. Because all the companies book by the end of the year, their financial result and book is reflecting the accounting profit. It's not a taxable income. So the annual filing, which has happened from March to May next year, is basically for calculating the taxable income and finalize the enterprise income tax payable.
So just I think for the people that are viewing, you mentioned AIC, the Agency for Industry and Commerce, so people know that what that is. So there's a lot of reporting going on a monthly and quarterly basis. One of the things you've also mentioned was the annual report. Of course, in China there's an audit, a yearly audit is necessary, but there's also something on the annual report from AIC. What kind of information is in that annual report, and for who is that annual report? What's the purpose of it?
You mean the AIC report?
Yes.
It's for, they will need the entity to ongoing entity locally, they need to report their basic information, which actually recorded in the AIC, but need to make sure the company report it and make sure everything is matched with the previous record or something changed. So it's like your, for example, your register address and your register capital and the situation of how much capital pay up and the investment entity numbers, the situation informations, and something like your social security, the thing how much you pay for social security and how many people work in your company. And if a company have a customer license, a custom license, which is registered in the custom of China, and they will basically need you to actually refill the information in the AIC website. They just the purpose for this is to make sure nothing changed or if there anything changed.
Okay. So it's not.
Yeah, one important thing too, just to make sure everybody's very clear, and this is something about taxation in China, just for everybody to be aware, and this could, let's say, creates a little bit of a challenge for most non-Chinese entities, is that the Chinese tax year and fiscal year for companies is January 1 to December 31 for all companies. You cannot choose your fiscal year in China. So if you have a different fiscal year in your group or your company in your home country, just be aware that the fiscal year in China is going to be January to December, and therefore you usually have to have kind of a set of tax books to cover the China tax year, and then a management account which kind of follows your fiscal year.
Yeah, that's definitely a good point. We have a few clients that have that point, and there has been often questions like, can't we change that in China? So unfortunately, no, and therefore we always need to do extra work to adjust to the physical year of the parent company. So I think that's very good, and people often forget that. Henry, later you mentioned, I think, one of the taxes that is of course paid is VAT, value added tax, and what a question that came in recently was regarding VAT, and there are two questions that came in recently. One is what happens with VAT when you have an entity in China, but you have overseas income, right, or overseas that you have been able to create from your China entity, because China is becoming more of a headquarters, has been more of a hub to do business in the region. What happens when you have overseas income in China in your entity regarding the VAT?
Okay, we basically call one kind of revenue called offshore revenue. And how to define the offshore revenue in China? There's three basic conditions. One is you sign a contract with the foreign entity, which has to be the foreign entity. Right? And the second, the revenue, you will get it generated directly from overseas. And the third point is the fee has to be calculated based on the foreign currency.
Yeah.
With these three basic conditions, the company will have a chance to apply for the offshore revenue definition, and so as the VAT exemption. So if the company have, so we mentioned there's income from overseas. So it depends on which kind of income. If it's a goods trade, if it's a goods trade, and the VAT is exempted because it's export, so nothing should be applied for that, for exemption. But if it's a service, then the local entity will have a chance to apply for the VAT exemption.
Okay. So it's really important also to before, I think before you enter your company, set up your company, it's to understand what kind of business process or what kind of processes are in your company, to make a good understanding also on the tax or on the accounting requirements you have on each in your company, right? So I think people, what I've noticed, and I think probably Mark and Henry, you agree with me, that people they think about that, setting up that entity. They like first they ask, okay, when should I go to China? Right, at one point they've made that decision, they set up that entity, but they often don't really think about the accounting works only when it starts, and then they are very surprised at all the work and all the prices and costs that is involved with that. So I think anybody entering the Chinese market should also really think about the tax and or the accounting requirements. And of course, the goal of everybody in China is to make money, to be profitable, and one of the key goals, and maybe, is to export your profits outside of China, right? You've worked very hard, and I know that getting your money out of China is difficult, but there, of course, there are processes. And Henry, can you explain a little bit what the main processes are to get your hard-earned money out of China and maybe redistribute it to your headquarters or to investors?
We actually there's several types of the scenarios to send money outside of China. But I think the most scenarios we see is by a service agreement.
Mm-hmm.
So so it's like a service payments you need to pay. And of course, there's another way is profit repatriations.
Yeah.
For most of the companies, there's two types of the scenarios to send to pay the money outside of China.
And just a quick discussion on the services payment. So typically these, just to avoid anti-tax laws, when you use these types of payments, these are things for like these services agreements would be services that your subordinate company has with the parent company. For example, if you have group marketing resources, group IT resources, group finance resources, those types of things. Typically, and this needs to be set up globally. You can't just charge the China company for this. Otherwise, it's tax evasion. And so what you want to do is, if you're charging, or if you only have the China entity, then you only charge China. But you can charge your subordinate companies fees for services that the group provides to those subordinate companies, based on like transfer pricing and international tax law. So you can do that, and that's typically where these services contracts come into play. And it's a way of kind of repatriating funds in a legal way, but it's in reality you are providing these services to the company. For example, use of your website, use of group marketing resources, things of that nature. But your pricing, if you're audited internationally, you do need to show a basically a reason for what you're charging. It can't just be some number chosen. So usually it would be a total, like for example, by head count, X amount of money per head count, and so you would charge the China or foreign entity based on their head count. So these are things, if you do want to engage in that particular aspect in terms of where you have the services agreement, you may want to talk to an international tax lawyer just to see the most legal way to do it, or the most legal way in which you can engage in that practice.
Yeah, we see it often, I think, also in engineering companies that, or in certain services where the China entity sells certain services, but uses the headquarters still for diagnostics or for engineering work, and there's a clear relationship. I think the key is there needs to be a clear commercial relationship or activity going on. Like it's not just to create fake stuff. But I think many people forget that they can use this way of repatriating, not repatriating profits or shifting costs to headquarters. I think that's one of the key messages here. The other way is, of course, as Henry mentioned, is profit repatriation. What are the concerns, or what are the key things to think about in repatriating money through dividends? Are there any requirements that people need to think about?
Yeah, there's a requirement. There's several requirements. There's certain procedures in the tax in the government side.
Yeah.
So basically the company they need to do a special audit to confirm the payable, we call payable profit.
Yeah.
And
yeah, sorry, can you do it once a year, or can you do it multiple times a year?
You basically what I see is most of the companies are once a year.
Yeah.
But you could choose to do like several times. But things is the government will check your previous repatriation history. And what I say is most of the time they will say you have to do this once a year, because they need to double check and confirm the financial results on a yearly basis.
Yeah. Right. So it's possible to do it multiple years, but practically once a year would be good. And you need to do an extra audit. There's a lot of procedures that needs to be done.
Yeah, and I think it would typically done after the audit. I think it would typically done after the audit, just because the government wants to make sure you've paid your taxes.
Yeah, understand, right. So we discussed a lot on already on taxes and the requirements and getting your money out of China. There's another topic that is always of interest to many of our clients or new clients and people entering China is HR and hiring staff in China. Then I think maybe we start off with a very general maybe question to Mark that we get is like, is hiring staff in China any different than in Europe or other developed places, maybe the US?
In terms of hiring staff, I mean, it's always good to have a process when you hire people and make sure. I mean, there are a lot of books out there to read on how to best hire an individual, and there's different interviewing methodologies. In terms of hiring staff, you do need to be careful in China, not because of the hiring practice. It's because typically, for example, in the US, it's an employment at will. And so if you find that the relationship was in error or that it doesn't work out, it's typically very easy or very simple to terminate that relationship. In China, terminating an employment relationship can be very difficult and costly.
Yeah.
So I would say you do need to be very cautious when hiring employees. Just really make sure that when you hire them, just really be sure that that's the person you really want for that job.
And let's say it is the person. Of course, people you can't, like, you interview somebody, you can't always know if that's the right person. That's possible, but of course, if that's the case, what kind of things do you need to have in place to be sure that you are in a position to maybe let somebody go? Like, what are the, like, okay. Of course, there's an employment contract, but what else are important?
Okay, so this is so there are two key documents you need. Let me just go into this. You need the employment contract and then the employee handbook.
Yeah.
Right. So the employee contract is relatively simple. It's the term of employment and salary, job functions. That's your basic employment contract, which I think is relatively common. That contract will have up to 3 different term periods. So you can hire somebody under a 1-year contract, a 2-year contract, or a 3-year contract. By Chinese labor law, the term of the contract will be accompanied by a probationary period. For example, a 3-year contract, the probationary period is 6 months, no less than 6 months. Actually, no more than 6 months. It cannot exceed 6 months, and it really can't be less than 6 months either. So it's 6 months. So you basically have 6 months to determine if that employee is going to work out. All right. So within that probationary period, you can terminate the employee or terminate that arrangement. However, even when the employee is on probation, you will have to pay compensation. So
Yeah.
it's usually about 1 month or up to 2 months of salary when you terminate them. So it can be, you still need to be prepared to pay a
severance.
basically compensation when you let them go.
Yeah.
So that's one of the key factors to look at. Now, of course, in your handbook, now there's caveats to this. There are items in your employee handbook which would perhaps detail minor offenses, moderate offenses, or serious offenses to company policy. And you can, of course, terminate the employee and not pay any compensation. But there's a process to do that. Like, for example, you have to give a warning, and then you have to give a second written warning, and then you have to file a letter. Then you have to provide training. I mean, depending on the offense. So at that point, if you're looking at terminating and not wanting to pay compensation, personally, we recommend talking to a labor lawyer in China because, again, China is a communist country and the labor law heavily favors the employee. So that's why we typically say just be prepared to pay a compensation. It's
Yeah.
have them sign a
Even it's
resignation.
even like even I was always it took me a long time to really understand this, and I was always very surprised that even if you have a contract of a year with an employee, then in normal, and not normal, it's right in my mind, it's like the contract ends and the relationship is terminated. But even I understand, even in China, when there is a 1-year contract and that contract ends, you still need to pay severance.
Right, you would pay 1 year. So on a 1-year contract, if you decide to not renew the contract, you would pay.
Yes.
You would give 1 month notice and pay 1 month of severance. So effectively 2 months.
Yeah. So it's really
2 months.
Yeah. So really, it's the idea of like fixed term contracts in China is always it is fixed term, but there's always it's not. You need to understand that when the relationship actually ends, that you need to be on time, and you still need to pay severance, even though it was agreed upon that it was 1 year.
Correct. And so generally speaking, unless you terminate with cause, there's going to be a severance payout.
Yeah.
Now, that being said, terminating with cause it can be extremely expensive because the employee, they're going to be very sour if they're not getting any compensation, and they can basically take the company to arbitration. I think it costs the employee about $10.
Yeah, I think $100. Yeah,
$10 to file an arbitration case against you as a company. And once that happens, then you're either hiring a lawyer or you're spending your own time to go to arbitration. And you just need to think is maybe compensation would have been $1,000. I mean, if it's a really high level employee, maybe you go through with it. But if you're talking about $1,000, is it really worth the time and effort it's going to take you to go through a labor arbitration court, a labor arbitration case? It's really not worth it usually.
Yeah, good. I think that's a good point. That's a good point. One of the things you've mentioned in the beginning is the handbook. The handbook. You have your contract and you have your handbook. We see companies that have their global handbook. They have a handbook in their headquarters or in other offices around the world, and they want to use that handbook in China. Which issues do you see with that?
Yeah, I mean, well, again, it's generally speaking, you could use that handbook, so long as it's I mean, again, we're in China, and so all legal contracts for them to be enforceable must be in Chinese.
Yeah.
So you can certainly use your contract, your handbook, so long as it's in Chinese, and you can use the English as a reference, of course, but it needs to be in Chinese, and frankly, it needs to comply with Chinese labor law. So
Yes.
long as it meets those two requirements, you can certainly use your global policies. We find that generally speaking, most companies, their global policies are really not compliant with Chinese labor law. And so they end up having they can of course create the local handbook, and make it as, I would say, as mirror their global policies as closely as possible. But
Yeah.
typically there's going to be a few things missing from their global handbook. Like I said, what constitutes a minor offense? What's a major offense? What's a immediately terminatable offense? Typically, you don't find all of those things in a handbook.
Yeah, and
In
it's
a
very also, yeah. And I think what you mentioned in the beginning, the process, I think it's very important that that when a person is hired, that they of course sign the contract, sign the handbook, acknowledge the content of the handbook, and that you have proof of that. Of course, we all hope that we hire the right people and that they will be long time and loyal to the company, and you can grow together. But sometimes it doesn't work out, unfortunately. And I think by
Yeah, and
having these
just
processes in place, yes, Mark.
on that note too, I mean, I've been in China a long time, and I've gone through the arbitration process. And the first thing the arbitrator or judge will ask is, did you receive the employment handbook?
Yeah,
Did you sign for it? And basically, if you cannot show that the employee received the employee handbook and acknowledge receipt, you've lost. You've lost the case. So it's
yeah. So
I
it's
know, I
basically
mean,
it's an
just
easy step. It's an easy step in the beginning, which could
yeah, and
save
it's
you a lot
also
of
one of those
time.
things that unless you're told about it, nobody really does it.
Yeah,
So it's but in and you know, just going on to the arbitration side, it's um, I know China has a really bad rap or bad reputation for especially employee company uh, outcomes. But the reality is the arbitrators, I mean, from my experience, they're extremely fair and practical, but the company has to show proof if they intend on terminating somebody.
yeah,
That's why, I mean, they have to show proof that this happened, and just saying it happened isn't proof that it happened. They really need to show proof. And this is why it's really important that if you do ever plan on terminating an employee, you really need to speak to a lawyer, because they're going to talk with you and walk you through what proof you need and what proof may be required depending on the
yeah,
situation.
yeah. Yeah, that's yeah. It's important to do your homework, and especially in China, where employees are very well protected. It's for that's not a good or bad thing. It's just how it is, and you need to
Yeah.
be well prepared. Another question, also on the HR thing, what we see a lot, and there's a lot of, I think, developments in this area, is when companies have, for example, an establishment in Shanghai, they hire people in Shanghai, or they have contracts from their Shanghai entity, but the employees work maybe in Chengdu, maybe in Shenzhen or in Tianjin or other places. Is that Henry? Maybe you can answer. Is that a problem where you need to think about if contracts are let's say with the headquarters in Shanghai, but the employees work in different cities?
Actually, just as we said, the situation, one situation is normal. It's like you actually what your employer is in Shanghai, but because of the operation characters, you have to work in another city,
Yeah,
because you have to keep doing the business traveling. So this is normal. in the business world. Of course, there's some cases the staff they actually stay in another city and for a long period. Under that case, they will also request to receive their social security in another city. So for the current, the latest regulation is if this is the case, then the headquarters has to open a branch office in another city to realize this request from staff, which has received the social security in different city.
Is it
Yeah, and
that
just
sort of shows? Yeah, Mark.
let me comment on that too. And so in China, because I don't think we've explained this, similar to, I mean, and I'm just not familiar with every country, but in China, you have your salary, your gross salary, and then you have, as mentioned here, your social security benefits, which include like a housing fund, your workman's compensation, your health insurance,
Pension.
your pension. So there are a few other social security benefits, and so companies, they open their bank account. They also open a social security account and a housing account on behalf of their employees, which they contribute to which they contribute. And so each city, for example, will have you would, for example, if you're in Shanghai, you would have your social benefits account in Shanghai. And so the employees living in Shanghai would receive their payments, like the company contribution and their contributions would go into the accounts in this city.
Yeah.
So that's why what Henry was saying is if an employee is really located in a different city, that employee will want those payments to be made there because, correct me if I'm wrong, if you're living, for example, if you're getting your social, like for example, your medical insurance paid in Shanghai, there may be difficulties in using your medical insurance in a different city.
Yep.
So that employee may want their medical insurance paid in, say, Beijing, because if it's only paid in Shanghai, if they go to a hospital in Beijing, it may be a problem. They may not be able to use their public insurance funds. So that's where, as Henry mentioned, you'll want to then need to open a branch office so that you can pay those funds. Now, one previous workaround was to use, say, FESCO, the Foreign Employee Service Corporation, where they were able to hire the employee on your behalf if they were not located in the city where you have an entity. However, I think in the recent year or two, within the last 18 months or so, the government basically stopped allowing even FESCO to outsource employees in this way. So they're even having problems. So they're kind of cracking down on not just foreign companies, but any companies hiring employees in this way. So it does make it that difficult. Now, that being said, some employees may be totally fine receiving their payments in a different city. So this is a question with the relationship.
I think what I've noticed, there's a lot of, I think you've noticed it also, there's a lot of changes going on China in this particular area. And I think that's a very big change, right? Because being able just to hire somebody in Shanghai, but they work in another city, that's okay. But if they now require to set up multiple entities and every branch will need to have an accounting, that would be a significant price increase of operating in China for certain companies. So I think this is definitely some things that people that are already in China or are going to China need to think about. Okay, what is going to be their expansion for the next couple of years in China, and how can I organize that in a correct way? It's almost we already have been talking more than 40 minutes on China and on doing business in China and on the taxes on HR. There was one question. There's also that we didn't reach from a client from online. The question was at which stage of business should I set up a company in China? I think that's very difficult to answer because depends really for what kind of company, what is the goal of the company. So I will rephrase, Mark, maybe you can answer this quickly. When should a company start setting up an entity in China? Do you have any?
As late as possible.
As late as possible.
As late as possible. It's I mean, which is any international expansion. I mean, so you need to look at what your business model is. I mean, are you providing services? Are you exporting? Can you use, I mean, because anytime you set up a company overseas, you're creating administrative costs, you're creating HR burdens. So there's a lot of costs involved in it. So you really need to think about, okay, at what point is using a partner or a network or using a distributor or some kind of partner. I mean, that's your initial phase usually, is you would use some kind of partner. If you're exporting, you would directly export. Eventually though, so then at one point you say, well, it's actually more beneficial for me to have my own entity there because I don't want to share the profits anymore with a partner, or I want to have direct brand control. So it's as late in the process as possible, but that may be very soon. So it is a hard question to answer, but it's something where I would certainly look at the other options first. So is it better to, if it's a product, directly export to your end customers, or should you find, maybe you find distributors first? Maybe then you realize you need a presence just to manage those distributors or to help marketing support. Maybe you have the funds and the ability to just directly invest, and so because you know there's a hot market, you're going to get the returns for it. So that's an interesting question. It is very difficult to answer, as you said, but ultimately, I mean, setting up a company it's an investment of both time and money, and so obviously weigh the benefits and the risk, and presuming the benefits outweigh the risk, then of course it's worthwhile to set up. But yeah, do keep in mind, I mean, maybe a light presence is better than going all in. It really depends on where you are in the company. And so do you have the financial backing? Do you have the managerial experience?
Yeah, I think on that people see China as a land of many opportunities, and there are many opportunities still for many companies to enter. So we still understand that.
No, and that's true. And it's a huge market. And generally speaking, it's a huge market, but it's also extremely challenging. I mean, it's again just looking at the sheer geographical size, and I think this is a misperception. As China is just this one monolithic country, and the reality is it's highly fragmented. So the Shanghai market, even for fast food, is going to be very different than Shenzhen. So it's versus even the smaller tier cities. So I think in a previous webinar we talked about the different tiers of cities. As you go lower down in the cities, the consumer is very different than the consumers in tier 1 cities. So it gets very complicated. So it's almost like looking at Europe, where you have this huge geographical area and they're all highly fragmented. So you got to navigate quite a bit.
Yeah, understand. So I think that's some valuable advice on when to set up in China as late as possible. We have already, we are at the time. So what I want to do, there's one other question that I want to answer, but what I want to do first is for the people that to whom I had said like we're going to be 40 minutes to share some last information before we go to the other questions. So one thing I want to mention to everybody that in July, we're going to have another webinar on trademark and intellectual property protection in China. So keep your eyes on the website to make sure we will send it also. And also, we're going to send you a free copy of our Doing Business in China handbook. Many of the questions that we answered here today, or questions that we covered here today, will also be covered in that book. It's a very handy guide for people that are already in China and that are going to go to China. You will receive that in a link to that in your email tomorrow. Then I want to come, before saying goodbye to everybody, I want to come quickly back to one question that we had. Also on setting up, and the question is like, what's the advantage or disadvantage of setting up in Hong Kong and having a presence in China? So I think in the past people set up their headquarters, then a subsidiary in Hong Kong, and then a subsidiary in China. having that Hong Kong branch. Do you see that still valuable, or would you say maybe other structures are more valuable or interesting?
Yeah, so it's basically should effectively the Hong Kong company. It depends if I presume it's a holding company.
Yeah.
And so the question, should you use a holding company to invest in your Chinese entity? And the answer really is it depends. It's not always necessary. It really depends on what you plan on doing with the Chinese company. So the advantages of using a holding company are, for example, if you want to change the ownership structure, bring on investors, sell the company, sell shares of the company. It's typically, you know, we're talking about the administrative burden in China. It's typically going to be much easier in, say, Hong Kong, Singapore, these other districts. So it's much easier to say change ownership in these districts. Furthermore, it really depends on which country your parent company is, because if you're looking at repatriating funds, what's your tax rate in your home company, and do you need those funds right away? So instead, you may want to put them in an offshore account, say Hong Kong, Singapore, wherever, and hold them there. And then maybe when you have a bad year or when your taxes are lower in your home country, then you can bring those funds back from the overseas holding company. If you're not really doing anything, if you plan on directly bringing all the funds back, you never plan on selling it, you never plan on changing the ownership structure, the administrative cost, to me, I don't think it's worth it. So I think, but every company needs to assess this. But the cost or the negative of having that holding company is it's an administrative burden. You're paying, for tax filings, for directors, those types of things in that jurisdiction. So it's really just looking at each company on a case-by-case basis and each situation and say, what's our overall goal? And so that's why, again, it's important just to think about not just now, but let's look down the road. Do we ever plan on selling? And even if you think you don't plan on selling, by the way, I mean, even Uber sold, right? Yes. So they sold their China entity, So I don't know the specifics to that, but maybe I don't know. But maybe it would have been easier if they had sold their Hong Kong company that was holding China. So, but that's just an example. So you do find that companies divest. You find yourself in a situation where you want to sell the company.
All right. Thank you very much, Mark, for these insights. Also, and Henry, for I think valuable insights on tax and on HR, and so a little bit still on setting up in China. I think we will do another one of these webinars where we discuss many of the questions we get from our clients, because I think it's interesting, and I hope also for the participants it's interesting. So again, I want to thank Mark and Henry for participating in today's webinar, but also all the attendees for participating. Tomorrow, as I said, you will get a free copy of the Doing Business in China book and the recording. And with that, I want to say thank you for joining today. Here you are able to connect to me for any additional questions. So have a good day or a good afternoon, depending on where you are in the world, and see you at our next webinar. Thank you very much.